Okay, mic check. 1 2 1 2, mic check. Okay, welcome everyone to the Pro Trade Room Plus and the Core CPI report. My name is Lee Goldstein. I'm the trading director for 10 Minute Trades. Please remember that all the trades we
Secured
discuss
overnight financing rate
are for educational
4.83% for October
purposes.
the
I
9th
am not a financial
versus
advisor.
October the 8th.
It is possible to lose money trading futures, so please trade carefully. Okay, all right. Good morning, everyone, from the East Coast of the United States. And it's starting to get chilly. It's in the 40s. I can't believe it. And the Phillies got knocked out. It is a dark, dark day. Very dark day with no more baseball. Can't believe it. Okay, it's 8 o'clock. Do you know where your CPI report is? So, what do you think about CPI? this has been, and I do, before I get started, want to say hello to everyone on YouTube. I hope our stream is working okay. I did get a message from OBS that there was a problem, but it was rectified, so hopefully the stream is working. Let me know if you're out there on YouTube. So CPI has been, without question, one of the most volatile, inconsistent reports over the years. And, if you go back a year and more, it was even more volatile than it is today. What we expect as the Fed settles down is that these reports may get less volatile because inflation is, supposedly under control. So the news that gets returned from these CPI, PPI reports is less of a surprise, creating possibly less volatility on the news. But at the moment, that doesn't change the fact that currently the brokers see these news events and will probably continue to see these news events as very, very high volatility reports. So they raise the margins for these events, and that does make it tricky to come up with a very good setup. You have to be, if people are trading in their cash account, it can be somewhat limited because the brokers are raising margin because they really don't want you to trade these reports. I mean, that's really what the truth is. They would prefer if people don't trade. When there's high margin, it makes it more expensive to trade in a cash account. The extra problem with prop accounts is there's a bond issue where the prop firms currently, or at least many of the ones that we deal with, are not currently allowing for the trading of the bond futures. So that creates an issue because our setup is a bond setup. So, look, sometimes a report, you just don't trade a report because there is no setup. That happens all the time. There's plenty of reports where because we just can't find a safe setup, we don't trade it. Now, I will say this. I've done a lot of extra testing off the grid, so to speak, not something I was prepared to put on the DMM, but I do have a gold setup that has tested very well over the last 3 CPI reports. So it is possible if you want to trade gold. I do have a setup, and I do have a micro gold setup also. So I'm going to go over the 3 setups that we have. Our main setup is bonds. That's what we feel has been one of the better setups on this report. There's no denying that this particular report is high risk, and if you did not want to trade it, you wanted to sit it out, or you wanted to trade after the news, that's perfectly okay as well. So keep that in mind, that it could be a report that you might want to trade it after the news, okay? Now, I do not have, currently, I don't have an NQ setup. I don't have an ES setup. I've not been a fan of those instruments on this particular report. The NQ, really, you have to use such a big stop because of severe volatility that I don't like the whipping on the NQ. Now, I know that some members are trading MNQ with a 200 tick stop on the jobs report. I'm not so sure that this report moves as much as the jobs. I mean, it doesn't move generally as much as the jobs report has been moving. But let me go over what we have. So the bond report has been working nicely. But again, don't forget what I'm saying. There's no denying that today is a high risk scenario. You don't have to trade live money. So that's everybody's personal decision what they're going to do. If you look at what bonds did last month, let's take a look at bonds. Just backtracking a little bit, everybody should set their time sink, right? Please set your time sink by going to the website time.is and make sure that your computer is in sync. This was, if you notice, our setup last month was the same. We only had bonds. Doesn't mean we don't watch other instruments. Bonds are on the left, and they had a pretty solid move. And you could see that gold had a very big move. Gold, very difficult. I don't think it was all that safe last month. When you do testing, it's different than a live trade because when you're testing, you can't always see, you can't see the liquidity. And you never know sometimes 100% if a report is safe when you're testing. Sometimes the only safe report is a report that you trade live because there's no way to know what the liquidity would have been. So that is something you have to keep in mind, that I could do all the testing in the world and it could still be a report that is unsafe. Okay, so you just have to keep that in mind. Now on bonds, and this is a report that, like I said, has a lot of risk. So one of the things you can do is try to trade it with one contract rather than two. But let's set up the trade. So it's a breakout trade. Our activation time on bonds is 8:29:58. And the bracket is 12 ticks. And the targets, if you trade two contracts, would be 8 ticks and 20 ticks. And then the stop is 20 ticks. And what we would do is if the first target gets hit, I'd move my stop using the target one stop move to break even minus 3 ticks. That way, if your first target gets hit, you're moving your stop to safety. And that's how I would deal with a report that might reverse, change direction before the second target gets hit. So that is our bond setup. All right, that's our breakout. So what if you wanted to trade just one position on bonds? And I'm just going to label it bonds breakout ZFBRK. So that would be my bond breakout. I always like to test the width of the brackets. In other words, I like to manage the report.
China and Japan ties are at a critical stage of improvement.
And by managing the report, that means I want to be able to see what the bracket width is so I can manage.
Order submitted.
If it's all scrunched together like that, it's hard to manage the trade. You want it somewhere in this area where you have room to move your stop. You can see your moving averages, your VWAP, whatever indicators you have on the chart. You want to be able to see them.
Order canceled.
And then you have to go back and put your time back to normal on the chart. Now, like I said, there's a lot of risk on this report. It could be where we get what's called a breakout for all, where every instrument works as a breakout. It's possible. That could absolutely happen on this particular report. So on the trade setup, trading one position, I would still use everything is the same, but I would go for a target in the middle of 15 ticks. I would go for 15 ticks on my target. My stop stays the same, but if the market should move, and I'll tell you what we'll do. So if the market should move 10 ticks in our favor, now it's not a very big profit if you do this. So I think the way to really approach it is let's use the second target. We'll go for our second target on the report of 20 ticks. And that way we could try to protect a little bit more profit if we get a good move. If we get a lousy move, it's going to be a difficult report to make money on anyway. So we want to trade expecting a good move. So if the market moves 15 ticks, we're going to move our stop to break even plus 10. So that way, if we get a decent move, we'll trade just one position, but at least we'll have some profit if the trade should reverse. Our activation remains the same, 829.58. The bracket is 12. One target of 20 ticks, a stop of 20 ticks. And then if the market moves 15 ticks, move the stop to break even plus 10. Okay? We've tested our bracket. And I'm going to trade that in our regular account. Just one position because there's a lot of risk on this report. Now, the gold setups that I have. Now, I haven't been trading bonds on any of the micro, any of the prop ROV. So I have not traded bonds on anything related to the prop accounts. Bullnox, I spoke to them yesterday, and they had no solution. They had not very much commentary to make about the bond issue. So one more time on the bond setup for cash traders, 829.58, bracket of 12, target of 20, stop of 20, and then if the market moves 15 ticks in our favor, our stop's going to move to break even plus 10. And then on micro gold, because I think most members probably would want to be as safe as possible, right? And I think micro gold and gold are very risky to trade because there's definitely a possibility of a lot of whipping. The testing was pretty good. I mean, I have to be truthful. Pretty good in the sense that you can find a setup that will survive a whipsaw, but in real life, like I was saying, you're never sure if you're dealing with liquidity. And then what that means is you might get a very bad fill. You could get a fill at the top or the bottom of a candle. And when that happens, when you get any kind of reversal, unless your stop is very, very, very large, you're not going to survive the reversal. So let me just show you a recent micro gold test. So it has a very watch. Let me just show it to you. I think I skipped the first one. Let's watch. it seems like it's moving very, very slow, but in the real price action, the move was much faster. So I'm definitely concerned about any gold setup because of the speed of the market. The testing doesn't test poorly, but I'm definitely concerned about the speed of the move in the real time market. For us, we're just going to trade one bond and that's it. The setups that I have on micro gold are as follows. I'll show you what I set up. So micro is MGC 1224. All right, that's the instrument. Now on the setup, it's a breakout, and the trigger time is 8:29:59. The bracket is 50. It's a very big bracket. The idea is we want to survive a whipsaw, and the truth is you can get a 70 tick whipsaw. It's possible. And what that means is it might fill you on the wrong side of the move, even though you have a pretty big bracket. If you go much bigger, you're going to leave all your profit in the bracket. So that's a big issue. If you can't make your bracket so big that all the profit gets eaten up by the bracket. Targets, 20 on target 1. Target 2 is 30. Because of all the whipping around, I want to get out of the trade fairly quickly. The stop is 70 ticks. It's a 70 tick stop. Now, micro gold isn't free to trade. You know, it's 1/10 of gold. Gold is $10 a tick. Micro is $1. So it's a pretty big risk for not as big a profit. So the reality is some reports you might be better trading looking for something after the news just because the opportunity isn't presenting itself because of the various issues surrounding an event. Brokers raising margin, setups that may not be allowed, all sorts of issues that are surrounding the CPI report. Inconsistency over the years. I mean, that's the reality that we're looking at. All right. Nobody would look at you and say, "Wow, what a foolish person! They're not trading CPI." It doesn't work that way. You want to trade the best of the best behaving reports. Always. That's the smartest thing to do. So 829.59, a bracket of 50, targets at 20 and 30 with a stop of 70. If my first target gets hit, then I'd move my stop to break even. If my first target gets hit, I'd move my stop to break even. BE. Okay? That would be the setup. I'm not trading gold. I'm just going to watch bonds. On this kind of report, it can be tricky to do your management. I'm not embarrassed to say that sometimes I like to trade just one setup, but I will put the time on 0. Time is on 0. I'll look at the brackets by enabling the chart, enabling
Order
the trade.
submitted.
All right. And one definite worrisome issue is the top of the bracket is at the high.
Order
If
canceled.
you get a pop to the high and a change in direction, what's going to happen? A trade that doesn't work, right? Because it'll fill us at the high and then change direction. That's a
Take
little
30
bit of
K in
extra
Eastern
worry.
time, we get US CPI
The only
year-on-year
reason it's a
forecast
little
to be
bit less
0.3%
of a
on
worry
month,
than
0.5%
normal
CPI month-on-month
is
forecast to
gold is not out
0.1%
of
on the prior
control
0.2%.
volatile
Core
right now. The
CPI year-on-year
markets
forecast
seem to be
3.2% on the
waiting
prior
for the
3.2%.
CPI
Core
news.
CPI month-on-month forecast 0.2% on the prior 0.3%. US retail
829.59
jobless claims
is the trigger
forecast
time.
230K on the prior 225K.
Now, it
US
might be
employment jobless
smarter
claims
to just
forecast
set up a
1.84
micro
million on the prior
gold
1.826
reversal
million.
continuation by choosing JOBB version 11, choosing reverse continue, right? And you could take two positions, for instance, and you could look for a profit of, let's say, 30 ticks, and you could go with a stop of 30 ticks, and you're just looking for a possible trend that gets followed after the news or a reversal that you want to take after the news. This would be an after the news trade. So you have a position set up, 2 micros, a target of 30, a stop of 30. That's all you need for a reversal continuation trade. Label it down at label, and then I'm going to leave it on the same account that I'm watching the breakout on. But maybe what I'll do is after the news, after the breakout, I'll change my software so I could trade it live. There probably won't be enough time. But so what happens when you enable a reversal continuation is you get your buttons, instant long, instant short, and that means that you can get in the trade immediately. All right, but it's discretionary. It's not automatic. It's not semi-automatic. It's completely discretionary. So what's going to happen on the news? Obviously, no one knows. We're also dealing with unemployment, the Thursday jobless claims. That has an absolute effect on this report. So we are dealing with two reports, okay? We are looking at two reports. So after the news, if you like to trade the ES, you can set up an after the news ES trade. There's no rules about obviously what instruments on this kind of a report. There should be significant movement from all the instruments. The euro will move. The currency futures, the euro, the pound, the Japanese yen will move. We'll get movement out of the indexes, okay? We'll certainly see movement there. And just to give you an example, our August trade, just going back, if you look at the DMM, we did have a YM set up, and we were not overly happy with the fills, okay? It was having difficulty with some of the fills. Meaning you might get filled top of the candle. Bonds have had nice moves on this report. You could see there was another nice move in August. Gold on the right. Has a decent choppy move. Not a bad move on gold. And then if we go back
So it's
to
8:30 a.m. Eastern time. We get US CPI
June,
data year-on-year forecast
let's take a look at June.
2.3% on the prior, 2.5%.
The further we go back,
Forecast
the more
0.2%
differently
on the prior,
our setups are going to
0.3%.
be,
Core CPI year-on-year forecast
because it's been
3.2% on
difficult
the prior,
to
3.2%.
find a setup
Core
that
CPI
stayed the
month-on-month
same
forecast
month after month
0.2%
after
on the prior,
month
0.3%.
on this report. Now in June,
US initial
we
jobless
still
claims
had bonds,
forecast 230
and
million on the prior,
we had a
220
couple of
million.
months
And US
where we
continued
traded
jobs
the
growth
YM.
forecast 1.83 million on the prior, 1.826 million.
YM on the left, bonds in the middle. MES on the right. We've tried looking at the ES as well. Again, a very nice move out of bonds. Nice move out of bonds. In June, everything had a very nice breakout. June was a breakout for all. We call that a breakout for all month, when almost every instrument had a good move. All right, so we're watching the market. I've got bonds on the left. So the funny thing that happened to me is I took a random trade with a bond contract yesterday in Buellnox, and it allowed me to take the trade. So I went over to Buellnox, and they didn't give me a very good answer as to why. But they did say in my conversation that you can't trade bonds. So maybe they will just disallow that trade if it's profitable. All right, so we've got about 2.5 minutes. And I want to thank everybody that's watching us. I'm just taking a look at my laptop to see who's here. If you hit that like button, we would really appreciate it. So the markets are relatively quiet before the news. We use an indicator called net change display. And on that indicator, I like to look at bonds on ticks. It just gives me an idea of the volatility of bonds from last evening when the markets opened. And bonds have been relatively quiet. Gold, I would say medium quiet. Gold, if you notice, there's a green 52. That means 52 ticks. And gold is calculated in points. I'm trading ZF one contract live, Sander. One contract live. But I do want to stress, the risk on this report. Okay? The behavior of bonds it's been very
Minute
good.
remaining. I'll lead with US CPI.
Doesn't mean it's going to be good today, but it's been very good. So we'll get our brackets a couple of seconds before the news. And I'm just testing micro gold on the right, so I'm not going to really pay attention to that setup. I'll try to manage my bond trade if it needs management.
Ten seconds.
Order submitted. Order submitted. Order filled.
So
2.4%,
just
2.4%.
another whipsaw,
2.3%.
a
CPI
whipsaw,
month, 0.2%, 0.2% higher than forecast.
whipsaw on
0.3%.
bonds.
Core CPI year on year.
And gold. Did anybody trade gold out
3.3%.
there?
Core
Anybody
CPI
trade gold?
0.3%, 0.3%.
Anybody trade gold?
0.2%. Downside in dollar, downside in stocks.
Because gold,
US initial jobless claims 258K,
yeah, in
258K
sim,
higher than
gold looked
forecast,
like it had a
230K.
pretty
The
good
US
move.
continued
Pretty
jobless
good
claims
move.
1.861
The
million,
news,
1.861 million.
the news,
Higher than forecast, 1.83 million.
if you look at the news, you've got a little bit higher on the CPI. A little bit higher on the CPI. That makes me wonder. Let me just do something real quick. I just want to reboot my platform really fast. Hang on one second.
So US continued jobless claims prior revised 1.819 million. And we have posted the US CPI September
So
2020
gold
report on the feed
looks
for
like it had a
data.
good solid move. All right, let's go look at GC 1224. Now, let's look at the video.
So US short-term interest rate futures rise after the inflation data.
Just watching the market movement after the news, you have ES
And Treasury yields
looking at what
pair
how the
gains. 10-year
markets
yield rose
responded
up
to this.
1.3 basis points at 4.08%.
Calvin says he used a 200 tick stop with MNQ on his Buell Knox account. 200 tick stop. Let's take a look at the video to see if we can get an idea of the speed of this move. How was the speed of this move? So let's take a look. So let me render this video. Give me 1 second. All right, so here's the move on this report. And bonds did not have a safe move. Anytime you get a whipsaw, there's not much you can do to have a safe trade. So you could see they went up and down. That creates an unsafe move. Looking
So
at
US
gold
single
on the
core
right,
inflation month over month,
I do believe gold
0.404%.
would have been a perfectly safe move trading it live. Micro gold had a very, very good. Now, Jim, you're saying you had a bad trade on micro gold. What was your fill? What was your fill? So Jim says he had a bad fill on micro gold, and that's where liquidity comes into play. So liquidity comes into play. Jim, I'd be curious what your fill was on micro gold. But I think, in all honesty, the reality of this report is when the brokers are putting margins up and we have an inconsistency in the report, it's better to really be careful and maybe sit out the trade. I mean, that's the reality. You don't have to trade the most volatile reports. There's no law that says you have to do it. So before we continue, I want to thank everybody for watching on YouTube. We'll be streaming again tomorrow, so keep an eye on your email. I'm going to shut down our stream. And hit the like button on your way out, everybody. So thanks for joining us on